On Friday, we got confirmation from Jerome Powell that it is likely that the Fed is teeing up the possibility of rate cuts in the end of this year. With expectations for a September rate cut pretty high, the market ripped higher here. And if you've been watching my videos, you know I'm already sort of cautious on the markets and that, I do have a lot of stocks that are sitting in my portfolio, but I'm a little cautious at all-time highs because I see some concerning things in the inflation and economic data reports. So in this video, what I'm actually going to be doing is sharing with you guys some of the stocks that I'm watching that I think could be a possible beneficiary if we do see a rotation or a softening in the market in the coming weeks and months. Perhaps we don't get all the rate cuts that we're thinking. Perhaps something doesn't quite go right. Well, let me show you why I'm a little bit cautious, and then I'm going to show you a couple stocks that I'm watching in the market this week ahead. So first and foremost, I want to go to our macro screener, and I just want to show you why I'm a little bit cautious. Now, I'm not a big fan of being super bearish on stocks for the longer term unless there is very good reasoning to be. But there is, in my opinion, some very solid reasoning to be concerned in a market that seems to not be concerned at all. Every single day, the market seems to go higher, and I do get a little bit cautious when that starts to become the new norm. Well, check this out. If we take a look at the stock's impact score on our macro screener within the stock box, what I want to show you, broadly speaking, as you can see, a lot of our economic readings are suggesting a little bit of softness in the U.S. economy. Now, specifically what I'm talking about here is that you have manufacturing PMIs and services PMIs, which have missed expectations. Retail sales numbers came in soft. We also have some inflation figures that were hot and some jobs numbers that have been looking a little bit rough out there. And yes, there's a possibility that the Fed starting to signal for rate cuts could be a positive thing for the market. I am concerned that with markets at all-time highs, it is priced almost for perfection, and that any sort of blip or perhaps some more cooling in the economy than we previously anticipated could send stocks much lower much quicker. So then what do you do if you want to be investing or buying stocks or trading them long side? If you still want to be a participant, but you don't necessarily want to be buying, the stocks that could get crushed the most. I'll be completely fair. I really don't like the idea of buying Palantir, even though the chart looks really good. Or buying, I don't know, I mentioned earlier, like Rocket Lab. Like you have some really strong stocks out there, some really big crowd favorites. You guys know I've held Robinhood since the back towards the lows. I've averaged share price of around $41 on Robinhood. I did very, very well in this stock. So I've had some really big gains in this move, and I'm now pivoting a little bit more recently to be a bit more defensive. And so what do I like? Well, I like healthcare. I think healthcare, take a look at ticker symbol XLV. This is the healthcare ETF, tracks a bunch of healthcare stocks, has been really beaten down. And a lot of it is because the Trump administration is seen as unfavorable towards healthcare, but many of these businesses are quietly growing their balance sheet and just killing it in terms of overall growth. And so I actually think that the risk reward on healthcare stocks looks more attractive than other places. I also think we may have just seen a pretty substantial quiet breakout here through these highs, and I'd be really curious to see if we're going to start to see some pickup in healthcare stocks. So which stocks do I like the most? Well, for this, I want to show you something pretty cool that we are still finalizing. It's the new top stocks indicator within the stock box. What this does is it looks at technical readings, sentiment, and financial data points for each of these companies that we have in the stock box and generates bullish and bearish kind of ideas. Well, check this out. If we go to sector and select just for healthcare for a second, it shows me the strongest and weakest healthcare stocks according to the stock box's scoring algorithm. Like I said, it's looking at like trend momentum, overextension, institutional activity, analyst ratings, and we do have more financial metrics that are being worked on under the hood than just this, but currently you can see the PE ratios are in here. Long story short, I am still going to be looking at some of these stocks and giving my thoughts. I wanted to look specifically at Pfizer, Johnson & Johnson, and Abbott Laboratories, as each one of these look like possible stocks that I could be watching for. So let's just go down the list. All again are healthcare stocks. We've selected the healthcare sector. And what we're looking at here is if we take a look at Pfizer, of course, the big notable stock that did very, very well during the pandemic has completely plummeted since then. You're talking about a peak to trough drop at one point of 66%. So what is going on with this stock, and are we possibly seeing a turnaround story that is sustainable? Well, again, I think that the risk to reward here is starting to look attractive. you possibly are seeing some higher lows forming on this stock. And while it is definitely not a crowd favorite anymore, this once big crowd favorite, I think, still has potential to maybe have a turnaround story. So I think from a technical perspective, I'm looking for something like this, a breakout, a retest of this stock's previous high around 25, 26. And perhaps this is a longer term value buy stock that, again, may be a nice place to hide out if I think the market is going to have a sideways consolidation period or even a downward pullback. So I think Pfizer is on the watch list for me. Again, very boring stock, but one that I don't mind maybe hiding out in. Another one is Johnson & Johnson. This thing has been on fire here recently. And again, I definitely would wait for a pullback on this stock, but check this out. We have multiple years of consolidation and a potential breakout here, multi-year kind of consolidation from 2023 all the way till now. And so if we were to get a pullback into the top range of this consolidation, this stock looks really attractive to me for what I would consider a potential still good buy from a momentum perspective, right? We've got price momentum to the upside. I like to see that, and a pullback to a long-term level of consolidation. This looks really interesting to me on a pullback. And the third one I wanted to mention was Abbott Laboratories, ticker symbol ABT. This is an area or an industry that I like specifically, going beyond just healthcare. If we get down into the medical device companies, I really like companies like Abbott Laboratories, Intuitive Surgical, Medtronic, and I think that there is some potential here for this stock to possibly be forming a breakout. And while this one is a little bit, more sensitive in some ways to, market rotation, I still really like the idea of medical device companies in general. So I'm looking for either a pullback into the low end of this range here, this 122.50 level, or a breakout perhaps above the 137.50. I would like to buy into that momentum on a breakout retest if we do get that kind of possible setup. Let's just expand our search here in terms of other defensive places we could be, right? So if we're talking about healthcare as a possible sort of, they have, much lower valuations and other things. If you wanted to go more risky, right, you could look into like the technology side of things, and you would see you've got AMD getting a strong reading. Just to take a look at that, actually. Again, if I thought the market outlook was a little bit better, if I thought the macro was okay, this looks like a really clean setup, right? You've got a pullback into a really key level of support, and I'm seeing this all around the place. You're seeing really good technical pullbacks on some of the really nice names out there, like AMD, of course, competitor to NVIDIA, and I see no shortage when it comes to chip demand here in coming years. I mean, you had a huge sell-off in the stock. It has now, of course, rallied. I think you're kind of late to the party. It's jumped 135%. Stock looks really interesting, though. Another one that caught my eye is MU, Meta, and TTD. So I'm actually going to go take a look at TTD really quick. So this is the trade desk. Got absolutely killed. I don't like the stock here in terms of price action. Check out how much this thing has dropped so quickly, down 64% from those highs of last year. Stock has gotten killed, but even after the drop, still a little cautious on this momentum here to the downside, which is looking ugly. But TTD, probably if you like the idea, it's an interesting kind of AI advertising type of company. Maybe if you're longer term, if you believe in the stock idea, it's really gotten a haircut here from its recent highs. So just thought that was worth looking at. Let's take a look at MU really quick, ticker symbol MU. Micron Technology, of course, semiconductor world, definitely a high-flying name. If the market continues to do well, I think this stock should do well. But like I said, just going to pass on buying on some of the more tech-heavy stuff, which I believe could be a little bit overbought in the short run as a collective group. Another one we could take a look at is Meta and Microsoft. Again, I like these names, both of them for possible longs. I mean, this just looks really clean, right? You had the pullback into support, finding this kind of 20-day moving average. Love the stock. I think it's one, I own the stock, right? I own some shares of Meta already. In fact, I can show you where we're at with Meta if we take a look at this. So I have 60 shares of Meta, really nice. I was able to get a pullback buy in the April and May sell-offs that we saw in the stock. So I still hold the stock, and I'm personally not adding to it. But if I thought the macro looked better, I would consider adding to it. By the way, the platform that I'm using is Webull. I'll leave a link in the description down below. It is, in my opinion, by far and away the best trading platform I've ever used. It's so clean for charting purposes and for tracking all sorts of stuff. If you want to do options, you can do options on here. You can pull up statistics on all sorts of things, take a look at your positions very easily and manage all of your trades. Plus, their trading costs are really low, and they offer a really generous welcome bonus to my subscribers. We got something set up with them that I'll leave linked in the description down below if you want to explore Webull in its entirety. Definitely check that out down below. Should be like the first or second link in the description if you want to check them out. But you'll also be supporting my channel if you choose to use that link. And they, like I said, they set up some really special specific offers for my subscribers to take advantage of for a limited time. So explore it, see if it's right for you. You could even like move over your existing account to Webull. They offer you some really cool perks. Like I said, all the information can be found with that link in the description. Okay, so if I'm looking at Meta, again, nice pullback here. My hesitation, though, is like I said, it's just the macro. I'm concerned about high inflation and slowing growth in combination with stocks at their high. Like I might be willing to take a stab on more things if the stock market was, if it was down 5, 6, 7%, I'd feel much more comfortable with the idea of like, okay, now I'm going to go out there. I'm going to buy things like Abbott Laboratories. I'm going to buy things, I'm going to go do some shopping. But I'm a little concerned that the market has gotten a little bit stretched. And I do think there is the potential for a kind of scare to the downside, and I think the risk is skewed more to the downside than the possible reward from buying stocks at these levels. And if I'm wrong, I'm wrong. I do own a bunch of stuff, like I said, and just showed you in my positioning. I have a lot of positioning still on. I'm trading a lot of options, but what I wanted to show you guys here is just without going through every single position here, what I wanted to show you is that you'll notice a lot of these kind of three-pronged setups. What these are covered calls. So a covered call is essentially when you own shares in a stock, but you also sell calls, specifically the way I do, out of the money calls on shares that you own. What that does is it says, okay, I'm selling a call and I'm making money if the stock goes down, but I also own the shares, right? So I want the stock to go up, but if it goes up too much past the strike price, then I don't get any extra gains. Now, why would you want to do this? Well, if you think that the market is going to go sideways or maybe even pull back, a covered call is perfect because you can hold on to your shares without selling them, but also, let's say I sold a call up here, right? I get paid to sell that call to someone. Someone pays me for that call opportunity. And if the stock price goes sideways or down, this just pays me out and nothing happens. I don't lose my shares, right? But if the stock price rallies, if you're unfamiliar with covered calls, I know this can sound like a foreign language. Maybe I'll link in the description some videos on my options course that I've done completely for free. If you want to check out the options course that I've done, again, it's completely free, linked in the description below on our website. That might be helpful if you want to get into options, but I have traded options for a couple years now and absolutely love it ever since adding it into what I do in the markets. So I have, like, for example, I feel a little bit more comfortable holding on to my Tesla shares because I've also been selling calls against the stock that I own, right? So I own Tesla. It is a speculative stock that, I've been like, you know what? I kind of want to decrease my positioning on it. So instead of just closing out the stock, I've decided, to sell calls against it and just see if I get called away. So if the stock jumps, right, what happens? Well, the calls get basically make it so I have to sell the shares at the agreed upon striker price. So 355. So I've sold calls at 355. I've sold calls at 400, and I own 400 shares at an average share price of around $235 a share. So, down here. So I'm sitting on a good gain on the stock, and I do think what my plan is with Tesla stock is to essentially see if I can get called away from my shares. If that happens, I'll just take a profit on the trade that was. I ended up getting price down here. So if we see a push higher and I get called away, I will just take the profit on this trade and call it good and kind of raise that cash for what I think could be a market pullback that will come at some point or another. I don't know the exact timing, but I do favor the idea of a pullback in markets, and having cash at the ready is something that I want to do. And so I've sold calls on the stocks that I do want to keep, and I've also raised cash by selling some stuff on things that I do not necessarily want to hold for the long term. So to put some context into other stocks that I am watching, let's just go back to our top stocks page here for a second. And let's see, Uber is another stock that I like quite a bit. If I take a look at Uber, I still own my shares. I was thinking about possibly selling calls. You can see I just have shares long Uber. So if I pull up UBER, you can see I just have a long position. I own 200 shares at an average price of about 66.91. So I've been sitting in a really nice gain on this stock as well, but it's not a big position for me in this account. It's a really nice gain, don't get me wrong, $6,000, but my account over the years has gotten to a size and I'm like, okay, 200 shares, I'd actually like to get that to be a bigger position. So if we were to get a downswing in the market, Uber is high up on my watch list for adding some shares. So I'm definitely watching this one. Would love to see, again, if you know anybody under 50 years old in my book should actually welcome market pullbacks because it gives us opportunities to buy stocks at lower prices for the long term. So when it comes to Uber, I am very hopeful that we do get some pullbacks because I want to buy more shares. I want to get up to like 300, 400, maybe even 500 shares of Uber. I like the stock, and I think it's finally got some positive free cash flow and looking good. I think it's a company that I like quite a bit. So if I take a look at like the income statement for UBER, pull this one up, you can see they've really finally kind of gotten into profitability and revenues are on the rise. And again, this to me looks very confident. I think they're breaking into new markets and a stock that I want to be a part of. So I'm excited to continue to watch Uber. We are looking like we are back to resistance here. If the stock market keeps going, I wouldn't be surprised if this thing pops higher. And if it does kind of go parabolic, if we jump into the 100s, I may start to look to sell calls, as I do think most stocks, if we do get a market pullback or correction, could have a little bit of a reset and a little bit of a pullback. So again, I just want to reiterate, why am I kind of so negative or pessimistic about the market? Well, when everybody seems, especially when everybody seems, so positive, we had such a strong Friday close. So I bought a lot of stuff in, the sell-off. Being contrarian sometimes pays out really big. And when it came to, April and May, I did make the predictive call that worked out very well, that I thought the Trump administration was not going to devastate the world with trade dynamics. Not necessarily because I'm some super Trump fan, but just because I think that that's not in their best interest and that they would kind of succumb to the idea that they don't want to actually crash the stock market. And that was the very correct call to make. And so I bought a whole bunch of stuff. And I've been holding and holding and holding, but watching as the economic data across the macro side has started to materially look uglier. We are sitting with tough inflation, rising inflation due to some of the trade stuff, I think, is a large contributor to it. So some stickiness in inflation, and at the same time, some labor data that seems to be cooling. That combination just makes me think, okay, it's not that I think we're going to have some giant, recession. That's not what I'm calling for. I just think that makes me very hesitant to buy stocks at the all-time highs. If stocks come off 5, 6, 7, maybe even 10%, it starts to look a lot more attractive for possible longer-term buys on stocks that I like. So that's my perspective. I hope that it was helpful to you here today. Remember to subscribe if you're new to my channel. And if you have stocks that you would like me to look at, make sure to drop them down below. Thanks so much for watching. And remember, if you want to check out Webull, support my channel, you can use their link to sign up and get some of those special welcome bonuses they're currently offering in the description down below. Thanks so much for watching. Have a great week ahead.